Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of Transportation and Logistics Investing: Opportunities, Risks, and Future Trends. Consider how startups are addressing key industry challenges. Autonomous delivery vehicles, from drones to self-driving vans, new technologies are enabling faster, more cost-effective last-mile delivery. AI and machine learning, predictive analytics tools that optimize shipping routes and reduce empty freight miles. Blockchain-based transparency, platforms creating secure, real-time data sharing for tracking shipments and preventing fraud. These businesses are lean, agile, and often hyper-focused on innovation. For example, startups developing electric fleets for urban deliveries align with both sustainability goals and the growing trend of green logistics. Investors have various entry points here, from venture capital funding in early-stage businesses to partnerships with or acquisitions by larger logistics companies. The potential for high returns is significant, especially if these innovations disrupt traditional models and scale globally. At the end of the day, transportation tech startups are more than just nice-to-haves. They're shaping the future of how goods move, and smart investors recognize the potential in being part of that shift early on. Risks and challenges in transportation and logistics investing. Investing in the transportation and logistics industry can be highly rewarding, but it's not without its challenges. While the sector plays a critical role in the economy, certain risks can directly impact profitability, timelines, and the overall investment landscape. It's essential to understand these challenges in order to make informed decisions and mitigate potential downsides. Market volatility. The transportation and logistics markets are inherently cyclical, heavily influenced by economic conditions and shifts in consumer demand. Why does this matter? Because these cycles can lead to periods of unpredictability for investors. When the economy grows, demand for freight, shipping, and logistics services generally increases. Companies need to move goods faster and in greater quantities to meet consumer expectations. However, in times of economic slowdown, demand contracts. For instance, declines in manufacturing output or retail spending can cause shipping volumes to fall, leaving carriers and logistics providers with excess capacity and reduced revenue. Another factor to consider is fluctuating fuel costs. Fuel prices can swing considerably based on global events, environmental policies, or supply chain disruptions. These cost changes directly affect transportation margins, especially for asset-heavy companies relying on large fleets. Let's not forget external shocks. Events like the COVID-19 pandemic, war, or natural disasters can create chaos throughout supply chains, disrupting shipping routes, increasing costs, and delaying deliveries. The supply chain bottlenecks seen in 2021 are a perfect example of how quickly the logistics space can shift, and how challenging it can be to forecast the impact. Investors should reassess the industry's reliance on economic performance and prepare for periods of volatility. Diversification and an eye on long-term industry trends can help offset some of these risks. Regulatory challenges. Regulations in transportation and logistics are constantly evolving, and these changes can have a profound impact on investment outcomes. Compliance requirements, fuel efficiency standards, worker safety laws, and international trade policies all add layers of complexity that investors can't ignore. Take emissions regulations, for example. Governments globally are working to reduce CO2 outputs from transportation, with stricter limits on everything from heavy-duty trucks to cargo ships. For companies that operate older fleets, this can mean significant capital expenses to replace or upgrade vehicles to meet standards. While these investments may strengthen environmental sustainability, they can also hurt short-term profitability. Labor laws are another area to watch. Changes in worker classification or wage requirements directly impact labor-intensive parts of the logistics chain, such as trucking and warehousing. For instance, stricter rules around driver hours or overtime pay could increase operating costs for logistics providers, reducing profit margins and creating ripple effects for investors. On an international level, trade policies and tariffs add unpredictability. Regulatory shifts in import-export laws or sudden tariff increases can deter cross-border shipments, making it harder for some businesses to maintain profitability. For example, The trade disputes between the US and China over recent years have caused disruptions that forced companies to reroute supply chains. The bottom line? Keeping up with regulatory changes is vital. For investors, this means tracking policy changes closely and evaluating how they might influence both operating costs and long-term competitiveness for individual companies or the industry as a whole. Case studies of successful investments. Investing in the transportation and logistics sector isn't just a numbers game, it's about understanding what works and why. Looking at success stories can provide valuable insight into effective strategies and help identify future opportunities. Notable companies to watch. Some companies have consistently outperformed in the transportation and logistics industry, thanks to forward-thinking strategies, innovation, and operational efficiency. Let's highlight a few standout players and dissect what makes them successful. UPS, United Parcel Service. UPS has remained a leader by embracing technology and adapting to market demands. Its investment in automation and data-driven logistics has made operations faster and more cost-effective. The company's focus on last-mile delivery, powered by tools like advanced route optimization and AI, ensures they meet tightening delivery windows for e-commerce. What sets UPS apart is its approach to sustainability. With a goal to be carbon neutral by 2050, their commitment to electric vehicles and renewable energy appeals to both investors and eco-conscious customers. They've proven that being green can be both good for the planet and good for business. Maersk. Maersk, one of the world's leading shipping giants, has transformed from a traditional container shipping company into a full-service supply chain provider. By integrating logistics and shipping into a single streamlined operation, they've reduced reliance on third-party providers and increased customer retention. Their bold investments in digitization, such as real-time shipping tracking and automated port operations, have enhanced efficiency. At the same time, Maersk is also addressing environmental concerns with commitments to carbon-neutral container vessels. This dual focus on innovation and sustainability has made the company a long-term favorite among investors. XPO Logistics. XPO Logistics has built its reputation as a powerhouse in freight brokerage, last-mile delivery, and contract logistics. What makes XPO unique is its relentless focus on technology and its asset-light approach. By leveraging proprietary digital platforms to match shippers with carriers efficiently, they've managed to cut costs while improving delivery reliability. Their investment in warehouse automation and robotics has also helped scale operations without dramatically increasing overhead. For investors, XPO is a testament to how prioritizing innovation in underserved areas, like warehousing, can lead to consistent returns. Flexport. As one of the fastest-growing logistics startups, Flexport has challenged traditional freight forwarding with its tech-driven platform. By simplifying the complexities of global shipping, it's made international trade more accessible for small to mid-sized companies. Flexport's data transparency and real-time analytics tools have been game-changers in reducing inefficiencies. While still relatively new compared to legacy players, its rapid adoption and customer loyalty highlight its future potential. Investors betting early on Flexport are banking on it becoming a market disruptor. These companies each demonstrate how adaptability and strategic focus can turn transportation and logistics into a lucrative investment opportunity. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.